Hi there, welcome to Kneppy Invest, and welcome to the final trading day of the week, August 16, 2024. We have about 1.5 hours left of trading today, and overall, it has been a good day. Now, the SGO has fallen a little bit because I'm pretty sure it was up about 1.3% earlier. So there's a possibility maybe the American futures are down, something like that. But we were led beautifully overnight by the American markets because of some surprising retail numbers, came in better than expected. So just remember, 2 weeks ago, we were a little bit more bearish. Now we're a little bit more bullish just because of some economic numbers. Now, who knows, next week we might see some more bad economic numbers. And I'm pretty sure even Australia, we had some really good employment numbers, some significant growth in jobs or something like that. And so who knows which way the economies are going. Some days we see some bad numbers. Some days we see some good numbers. Just go with the flow. So right now, I have been buying companies in the past week and a half. Most of these companies are breaking out. So let's hope, for my sake, that the company share price can keep on going. And if they can't, I'll just sell out and take a small loss and ride the winners. Okay. Now, even though it's been a pretty good day on the markets today, everything is up pretty well, including mining companies. When it comes to announcements and financial results, pretty sparse. Not much happened today, which I'm okay with because the last few days were quite busy. But today, not many companies released their results. I have a list of about 8 companies here, and a few of those companies released their results last night. PWR Holdings, in fact, released their results just after the market had closed last night. I am a shareholder, and last time I looked, the share price of that company was down a fair bit, over 10%. We'll have a look at that company in the top 5 stocks of the day. Some of the other companies that released results overnight include, in fact, let's have a look at the earnings calendar from ComSec. Here we go. So there is PWR Holdings. Released their results last night. Amcor, Domain Holdings, ASX, Charter Hall Retail REIT, and GQG Partners. A few other companies released results who are not in this, including NAB. NAB released a quarterly update, so I suppose that may or may not be financial results. I am saying it is financial results, it's quarterly results, and also 3P Learning released their results as well. I'm not going to talk about that company at all. Not the sort of company I like no matter what. Might have a quick look at the chart. That's about it. And I'm not going to really discuss Amcor either. So my top 5 stocks of the day do include 3 of those companies. The other 2 companies that are in the top 5 stocks did release interesting announcements today. One of those companies is up about 25%, and the other company is down about 35%. And what I might do is I will look at ASX results. So it's not in the top 5 stocks of the day, but I'm just going to have a look at the financial statements. I have never had a look at this company in the past. So this will be the first time ever. And why not? Why not have a look? Because it is a moat. But they have done some ridiculous things in the past few years, including their chess, whatever it's called. Forget what it's called, but they spent a lot of money on that for nothing. And on Monday, the new trading week, we have a massive amount of companies releasing results, including A2 Milk, Nuix, Iris, Reese Limited, and other companies releasing their results next week include Baby Bunting, ARB Corporation, Deterra Royalties, Reliance Worldwide Corporation, Ansell, Hub24, Monadelphous. Well, that's all on Tuesday, by the way. We also have Corporate Travel Management, Santos, Breville, Data3, Cleanaway, Insurance Australia Group, AUB Group, Domino's Pizza, Venture Services, WiseTech, Babcor, Brambles, Pexa Group, Helios, Eagles Automotive, Telix Pharmaceuticals, Whitehaven Coal, Megaport, Sonic Healthcare, Insignia Financial, Medibank, Northern Star, Cube Holdings. I'm missing quite a few, by the way. Super Retail Group, Polynovo, Coventry Group, Ingman's Group, Latitude Group, Main Pharma, Spark New Zealand, and that's it. So next week looks like it's going to be quite busy. Okay, so what do I have in store today? Well, I've already told you some of the companies that will be in the top 5 stocks of the day. We'll go through the ASX today, looking at the best and worst sectors, indices, and also companies. have a look at one tweet which is relevant to PWR Holdings, and maybe a few of your comments. Maybe a chart or two. Who knows? I'll have depending on the timing. So let's have a look at the ASX today. I'm not going to show you the tweet just yet because it's relevant to the number or the top stock of the day, which is PWR Holdings. I am a shareholder of that company. And even though it is top stock of the day, it's not for the right reasons. Anyhow, let's have a look at the market, the sectors and indices. And yeah, I did get the feeling the markets have fallen today, and this actually does back it up. So the XTX, XAO, and XJO have all fallen through the day, just gradually. But yeah, there is a slight gradually weakening of all three indices there. But every sector has had I was going to say a good day, but real estate is only up 0.09%. I suppose that's better than being negative. So we'll say all the sectors had a good day, particularly energy and materials. So if you're heavily in the mining companies, you're probably loving life right now. And the ASX 20 is up 1.1%, probably led by iron ore and the energy companies, Santos, and financial companies as well, because they're up 1.21%. So a lot of our companies are mining and financials. So if we open up the ASX 20, I'm assuming all those are the top of the best performing companies today. In terms of how many are up, how many down, I'm going to say 17 up, 3 down. Well, nowhere near it. And I would assume the reason why it's 14 up and 6 down is because many of the companies that have performed well today are some of the biggest companies on the ASX. So let's have a look and rank these companies by market cap. See if that verifies. Yes. In fact, the 6 biggest companies on the ASX are all up, and those 6 companies include 4 banks, a mining company, and a healthcare company. And all those companies, apart from Westpac, are up over 1%. And then Wesfarmers down a little bit, Macquarie down a little bit, Goodman Group down a little bit. And there's Fortescue up 2.23%, and Woodside up 2.25%. Okay, so let's have a look at the worst and best performing companies on the ASX. See if there's a few surprises in here. AU Make, I'm not sure how to pronounce that. Market cap at 25 million, which I'm a little bit surprised. I'm just going to see if this company did release anything today. So this is like I'm pretty sure this originally back in 2019, this company set up Daigou stores for Chinese so they could buy Australian stuff and then send them back to China. And then COVID-19 happened and destroyed this business. But chart does look interesting. There's been some buying and nothing's happened recently. They did a couple raising 2 days ago, but let's just have a look at the chart. Share price has turned around and is on a little bit of a run. And share price did get above 1 cent, and that was the big move. And here it is. Yeah, a bit of a run with AU Make. Share price now at 1.1 cent. So I could buy these shares right now because share price is above 1 cent. For the longest time, it was below 1 cent, and I didn't care about this company at all. The only reason I would even think about this company is because share price has gone a bit of a run. So for some reason, the market is liking AU Make, and I don't know why. Artemis Resources up 41.67%. I'm assuming this company did release something. Market cap is 33 million. I could be mistaken. Yesterday they released something. High-grade gold vein discovery at Titan Prospect. Was the share price up a lot yesterday? Let's have a look. This could be like a delayed reaction. What happened there? No, the share price was up 33.3% yesterday and up another 33.33% today. Both days on pretty big volume. So the market does like this announcement, although saying that this could be just day traders. I don't know. I am assuming the chart looks okay. I wouldn't classify this as a breakout just yet because the share price was or is still in a down trend. And the whole reason I go through this process is I'm looking for breakouts on positive news on a really good volume. So we have a few things going for Artemis right now. The high volume is one of them. Share price increasing 2 days in a row, but Not quite the thing I am looking for, and it's more of a story stock, I'm assuming. And elsewhere, oh, there's Synlait Milk. Yes, Synlait Milk is in my top 5 stocks of the day. Share price up 25.46%. And not only that, A2 Milk, which is a party to this particular announcement that has seen the share price of Synlait Milk rally. I'm pretty sure even A2 Milk share price has rallied as well, even though they do have to spend a little bit of money because of this announcement. Share price up 4.46%. So this might have relieved some doubts about Synlait Milk. And that's maybe why, and less risk, and that's maybe why the share price has rallied a little bit. So I'm talking about Synlait Milk when I should be talking about this company later in the video because it is in my top 5 stocks of the day. And Appen, another good day for Appen. The chart for Appen looks spectacular. So if I'm going to have a look at the chart, I'll have a look at Appen. Chart is really looking, not only the chart, share the volume is absolutely stunning as well. So for some reason, it could be day traders again. I don't know. Otherwise, nothing there. Adriatic Metals, a nice little bounce. We'll have a look at Adriatic Metals too, because the share price had fallen a fair bit, and this could be just because the share price or the shares are oversold. Let's have a look by market cap. We have Zip up 11.66%. Elsewhere here, nothing of note. Playside Studios up, liking that. LGI up, I'm liking that as well. 2 companies I do own, and Playside Studios for some reason had been falling. Not sure why, because they released a really positive announcement about 3 or 4 months ago, and the share price has dropped about 50% since then. Maybe not quite 50, maybe like 30 or 40% on no news. Just again, sentiment can drive the share price higher or lower by a significant amount for just illogical reasons, irrational reasons. I'm not saying that's happening with Playside Studios, but the company hasn't really released anything. Anyway, let's have a look at the worst companies today. On a day like this, you don't want to see your companies in this particular list. Silver Mines is at the top of the list, and I did put Silver Mines at number 4. I just had to include it because share price is down 39.36%. I have heard a few of the viewers of this channel mentioned Silver Mines as a possible silver play, and I even have mentioned Silver Mines a few times. And the announcement today, the market hasn't liked it, and for obvious reasons, when we look at it, share price down 39.36%, and there is PWR Holdings down 15.8%. I do want to talk about that company later in the video and discuss why the share price is down, but not only that. At about 11 a.m., the share price dropped significantly in a fairly short period of time. I didn't understand it, and then there was a good tweet from Claude Walker explaining what happened, why the share price fell at that point in time. So look out for that later in the video. Otherwise, most of these companies are fairly small. Let's have a look by market cap. So we're going to see PWR Holdings there. Clarity Pharmaceuticals down for some reason, just noise. And that's it. No other companies here are triggering any sort of memory in my brain. Maybe my brain's going haywire, but I don't remember any of these companies releasing any significant news today. Okay, so let's get to the top 5 stocks of the day. Should I start with the honorable mention? Yes, let's start with No, I'll leave that to last, just in case I don't have enough time. So let's start with Synlait Milk and A2 Milk. Both companies are up, but Synlait Milk is up by 27.27%. Now, the whole reason I go through this process is I'm looking for breakouts, and I know straight away this is not a breakout for Synlait Milk because the share price has fallen a lot and the chart looks ugly. But this could be the start of a flow of really good news from the company. Who knows? Maybe this is the start of the turnaround for Synlait Milk, and we'll always remember this particular day, August 16, 2024, the day when you could have bought Synlait Milk at 30 to 35 cents. So maybe in 10 years, the share price of Synlait Milk will be $35. Who knows? I doubt that will happen, but you just don't know. Anyway, let's have a look at the announcement. I'm just rambling on. Synlait Milk, or Synlait, and the A2 Milk Company settle disputes. I'm pretty sure A2 Milk owns a lot of Synlait. I'm pretty sure it's a major shareholder of the company. So settlement of various matters in dispute. So one of these was released by Synlait Milk. The other one was released by A2 Milk. And I've opened up the one that was released by A2 Milk. So a settlement of various matters. I'm not going to go through all this because there's a lot of matters. Look at the key points. There's a myriad of key points here, and I would bore you if I went through every single key point. But the main thing here is, or the most important word here is settlement. And I'm pretty sure they both use that word. Well, A2 Milk used settlement. Synlait used settle dispute. They both use the word dispute, by the way. But this is something the market likes. The market hates risks. And I would say Synlait Milk has been heightened risks over the past few months. They did have a fair bit of debt, and maybe even this dispute with A2 Milk had increased the risk of Synlait moving forward. So that's all I really want to say about this particular announcement in Synlait Milk. So let's have a look at charts for both companies. We'll start with Synlait Milk, and we already know this is an ugly looking chart. Now let's look for some positives. Yeah, let's search for some positives. Share price has, well, this is not a positive. Share price has dropped a lot. In fact, at one point, 2019, 2018 share price was as high as $12. Now it's 34 cents. Oh, that's ugly. But let's look at some positives. The share price did get to a low back on the 27th of June. So it's not that long ago. It's less than 2 months ago. So maybe this is a consolidation period for the company. And in fact, the last two announcements the company has released have been positive. On the 11th of July, I'm pretty sure this had something to do with their debt. Share price increased 47.8%. Now today, the share price is up another 27% or so, and pretty good volume the last 2 days. So some nice volume coming in. 2 good days in the past 2 months. So maybe the bottom has been reached for Synlait Milk. It could, I don't know, but I am not tempted to take a position in Synlait Milk at this point in time. On the other hand, I am trading A2 Milk. So it was good to see this bit of a reaction. Now, at this point in time, as A2 Milk share price has been going sideways for about almost 3 months. Yeah, share price has been going sideways for almost 3 months. And I am waiting for the share price to get above $7.40. That's a fairly important level for mine. That would confirm the share price is still an uptrend. Now, share price of A2 Milk can keep on going sideways for the next year. So this is the sort of position where I could find myself unwinding it if I don't see the share price move to $7.40. I need to see the share price maintaining an uptrend. And one of the ways I'm doing that is I'm looking for companies, and this is also true for companies that I am trading. I want to see the company reach high every at least 3 months. So if I look at the last 3 months, I need to see the company reach a high during that period. So A2 Milk might be almost failing that. If we go back 3 months ago, so 15th or 16th of May, yeah, it's right here. So we did see a high. That was on the 28th of May. But if we get to, say, the end of August, and if the share price hasn't got to 740 there, we haven't seen a high for 3 months with A2 Milk. So that is one thing I'm working on, and that is just me finding or maintaining my holdings in companies whose share price are in uptrends. And I just see A2 Milk trying to stay in a consolidation period right now. And when a company is in a consolidation period, it could remain in that period or that stage for, I was going to say many years. It could remain in that stage for a long time, or a while. We could stay in this stage for 2 years, 3 years. Who knows? Anyway, so that's the number 5 stock of the day, Synlait Milk. I've also included A2 Milk there as well. Coming in at number 4, we have Silver Mines. They did go into trading hold at 8:45 a.m. and they released an announcement at 12:42 p.m. The whole reason why the share price is down. In fact, it's now down below 10 cents, which is not a level you want to see the share price drop low. That's a very important level, 10 cents. One of the most important levels for a share price. The reason it's an important level, it's a round number plus shares move in different increments above compared to below. So below, they move in 0.1 increments. Above 10 cents, they move in 0.5. You can just see that by the buyers and sellers. So you can see it's 9.9, and then on the buy side, it's 9.8, 9.7, 9.6, 9.5. But on the sellers, 10 cents, 10.5, 11 cents, 11.5, 12. Yeah, so different increments. And I have seen this over the past 15 years since I've been investing, that companies can struggle to get above 10 cents. And when they do get above 10 cents, that usually is a good thing. But Silver Mines is going in the wrong direction. Now, I don't know this company much at all. And apparently there is some sort of proceedings, legal proceedings in regards to their Bowden's Silver project. And this is another instance of a risk. So there would have been some people who say, no, I can't buy shares in this company because what happens if this outcome of this appeal is not beneficial to Silver Mines? And we can see just by how the share price has performed today, this is not beneficial to Silver Mines. Now, again, I don't follow this company. I haven't been following this dispute, but it was not favorable for Silver Mines. And we can just know that by the share price. And you probably could read this yourself. The company advises that the Court of Appeal has today upheld Bingman's appeal, which I suppose is the counterparty, if that's the right law terminology. And the orders made by the Court of Appeal unfortunately mean that the development consent for the project can no longer be relied upon by the company. Risk, elevated risk now for this company. The company is currently working with its legal advisors to properly assess the implications of the decision. The company will provide an update to the market following this review. Other than that, I have no idea what this legal matter is about. What I do know, the market doesn't like it, share price is down. So let's have a look at the chart for this company. And more than likely, I probably won't be following this company anymore. Unless things start to turn more positive down the road. Now, even leading up to this particular announcement, chart didn't look that good, did it? So even leading to this particular announcement, the chart didn't look all that good. In fact, just before this announcement, the share price was in a bit of a downtrend, which sort of correlated to the price of silver. But yeah, I think people have been throwing this name out there because it's a silver company. There's not many silver companies on the ASX. It's got silver in the name of the company. But when you look at this chart, it's ugly. And the last time share price of this company was at or below 10 cents was back in 2020, coming out of COVID-19. There we are. So we're about a 4-year low for Silver Mines. Okay. Now let's move on to some financial year announcements. The first one is a half-year announcements. GQG share price was down. I'm surprised by this. 3.51% down. Now, yesterday the share price closed at 285. This morning the share price opened at 293 and went to a high of 297. So initially there was some positive vibes about this announcement, and I can understand. What I'm going to do is I'm just going to open up. Which one? I'm going to open up, I suppose, the media release here. Yeah, the media release. Yeah. And it looked pretty good. Now, again, I don't know the expectations. And just because the numbers, the increases look pretty good, doesn't mean it's actually good results. Because if the market was expecting, for instance, now we'll have a look at net revenue. So revenue up 53.1%. Net operating income up 54.9%. Net income after tax up 56.4%. Diluted earnings per share up 75%. Total dividends per share up 46.3%. So you might say, wow, that's great numbers, a great result for the company. No, a great result means it has to compare favorably to expectations. And I'm assuming that either the market doesn't like the results. When I say doesn't like results, the results didn't meet expectations, or the company released some disappointing guidance. And I don't think that really happened. So there is a possibility that these numbers slightly disappointed the market, even though they look absolutely stunning. Earnings per share at 7 cents. So this is half-year results, by the way. I'm pretty sure these are half-year results. Yeah, interim results, yeah. So you could mate, 7 cents. So we'll say this is the wrong way to do it. No, we'll say there's a little bit of growth in the second half. We'll say earnings per share at 15 cents. That's American dollars, by the way. I hate this. They're reporting in American dollars, reporting in Australian dollars. Jeez. I sort of know why they're doing that, but the P ratio of this company is not that high. 16.91. I thought it was a little bit higher than that. And I'm just going through went very quickly through the numbers as I was like, and I was trying to do currency conversions as well on the fly. So I'm not going to say any numbers, but doing it really quickly, I just went, wait. The P ratio of this company is not that high at all. I thought it was much higher. Anyway, so the market hasn't liked it. Now, I am trading this company, by the way. So this could be a bit of a sell signal for me. So let's have a look at the chart for GQG. I always want to write QGQ, not GQG. Is this a potential sell for me? Now, that's the weekly chart. Not necessarily so. We can see a bit of volatility today. We already know that because share price actually did open up higher. Now, just because the share price or there's been a bit of selling today doesn't necessarily mean it's going to be negative. I have seen on occasion this sort of thing happen, and then the next day share price rallies. In fact, not only the next day, the next few days, the share price rallies. So this could be just a few other fund managers selling out, taking profits, and because they sell on market, maybe that puts a little bit of pressure on the share price. Sometimes I will look at the 1 minute data just to see if there was a sudden drop in the share price, because that could be hinting at something happening during the day, but here we don't really see that. And yeah, the share price opened up higher and the selling began almost immediately. And it continued all the way through to 1:35 p.m. And since then, we have seen the end of selling. Share price has recovered. More enthusiasm coming in for the buyers compared to the sellers. So that could be a good sign moving forward. I'd love to see the share price get a little bit higher. And if the share price does get a little bit higher, this one-day candlestick, we do see, where is it? I was right there. The one-day candlestick would look actually not that bad. I'd like to see the share price get above maybe $2.80. Then the one-day candlestick would look a little bit better. But no end in the uptrend yet for this company. And I think some value. Just think. Really good increase in numbers. So I'd suppose the market is saying, yeah, we don't think this company is going to continue those results. But if they do, this company is like the cheapest company on the ASX by far. Okay, so that's GQG. Coming in number 3. Coming in number 2, we have Domain Group. Yes, Domain Group. Or Domain Holdings, sorry. Share price is down. This is another case of a bit of selling coming in because when I first had a look at this company, when the market opened, the share price was up about 3%. Ooh, it might have even been higher than that. Might have been like almost 5 to 7%. So again, just like GQG, there has been a bit of selling in Domain. And I'll be honest, like I'm not the biggest fan of this company. REA Group, way up here, then Domain Holdings way down there. But when I had a look at these numbers, and again, it's just looking at the numbers, and the numbers can fool if there's no context. But nice growth for Domain. So revenue up 13%, EBITDA up 26%, so nice increase in margins. EBIT up 31.9%. Earnings per share at 7.8 cents. Although they have an earnings per share adjusted net profit. We'll go with a conservative route and just say their earnings per share is at 8 cents, which means the markup cap of this company is still pretty high. Not the markup, the P ratio is still fairly high at just under 40, which seems pretty ridiculous, but yeah, it's 34 according to Comsec, but that's on old data. So yeah, on the valuation, not like GQG, but nice growth for this company. And Domain Holdings always is viewed as the ugly, younger stepchild brother to REA Group. I'm sorry if you are one of those in real life, but yeah, it's always thought of as the weaker competitor to REA Group, but it's doing okay. Just because it's a smaller company doesn't mean it can't do well. And at this point in time, it is doing well. Anyway, I am a shareholder of REA Group, but not Domain Holdings. And let's have a look at the chart. Of course, let's have a look at the chart. So DHG share price has been a downtrend. Again, compare Domain Holdings to REA Group. So which company would you like to own? This one or this one? I should not be doing this. Showing my bias. Which chart is the better one? This should be an easy answer. And I know Rudy Van Villepick would definitely choose REA Group because if he has two companies, he's always going to choose the bigger company, no matter what. No matter what, the bigger company he always chooses. If a company was a much better company and was just smaller than another company that was much better than by like $1, not $1, yeah, $1. If it had a valuation of 3.1 billion and $1, and this other company had a valuation of 3.1 billion without that dollar, he will still go for the weaker company, the yuckier company, because it was valued a little bit higher. It was a bigger company. Now I'm being a little bit dramatic there, but he does this. He does say the same things time and time again. That oh no, this company is smaller. I prefer this other company because it's bigger. Bigger doesn't always necessarily mean better. History has shown that if bigger always meant better, the biggest companies in the world would always get bigger. If you go back through time, all those big companies 20, 30, 50, 100 years ago are no longer with us, or they're very small right now. So does that mean the big companies today are going to weaken? Who knows? They could be broken up. There's even talk about breaking up some of those companies, like Alphabet. So bigger doesn't necessarily mean better. In fact, you could even argue when a company gets bigger, there's less room for growth and there's more red tape, that sort of thing, and they're more likely to actually go backwards. So bigger doesn't always mean better. Okay, so rant ended. Anyway, so the answer there is obvious. REA Group is a better company than Domain Holdings. I just thought Domain Holdings would have a sort of a lower valuation, but it has a lower valuation than REA Group, but I thought it had a lower valuation than 35 to 40. So that's Domain Holdings coming in at number 2. Coming in at number 1, we have PWR Holdings with ticker PWH, down at 16.43%. They released their results yesterday afternoon. Now, some cynic would say, well, they wanted to release their results after the market had closed, so everyone forgets about it. It doesn't work like that. The other thing I probably would mention is I have a feeling this company does that always. So if we go back last year, they released their results on the 18th of August 2022. So this is 2 years ago at 6 p.m. Last year, they released their results. Where are we? They released their results at 3:57 p.m. And yeah, there would have been no trading in that company that day because that's just before the closing auction. So this company tends to release their results later in the day and typically after the market has closed. They're not trying to fool the market by releasing it late. I can almost guarantee you someone said that on Hot Copper. I haven't even looked at Hot Copper, and I can almost guarantee you someone said that. If not said it, they would have thought it. Anyway, what happened here? Now, I am a shareholder of this company, so whenever I am a shareholder of a company and they release results, I'm going to be a little bit more interested. Okay, so I thought these results were okay. Yeah, they're okay. Now, this company does have, like, the earnings per share is at 20, we'll say 25 cents, and the share price of the company is 9. So we are talking about a P ratio now below 40. So now below 40, but when you have a P ratio of about 40, you need to see growth. And the company did provide some okay growth. So revenue up 17.8%, EBITDA 15.7% higher. So first little concern there would be a decrease in margins. Operating cash flow up 15.9%, profit after tax 14%. Again, a bit of a suppression in margins. Earnings per share up 13.9%. Dividends up 33, or interim dividend up 33.3%, and total dividend up 12%. A few things I do like about this company, and particularly where the growth is. It's in the airspace or aerospace and what's the other one they call it? Aerospace and something else. Really good growth there. I think that is a significant growth engine for this company. They'll also be spending a little bit of money on a new Australian factory. So I didn't think that would freak out the market. It just mentions here the upgrade and fit out costs will be circa 25 million in capital expenditure in financial year 25, and they are going to invest $13 million in new equipment. So there is a possibility that financial year 25 numbers might seem weak because of the increase in expenditure. And then I noticed, we go to the chart for PWR. So this is, I am a shareholder of this company, and this is not, if I wasn't a shareholder, I wouldn't be trading this right now. Or if I didn't think this company was a high quality company, I wouldn't be trading this. This is a yucky chart, just doing nothing. And this is over the last 2 years. But today, if you look at the 1 minute data, this is what I look for. So on open, the share price dropped a fair bit. It dropped 10% on open. Then it went sideways for about 2 hours. And then right on 11:09 AM, the share price dove significantly in a fairly short period of time. In fact, the share price went from $10 and about 50 cents down to $9.30 in about an hour and we'll say 15 minutes. And then the share price bounced. In fact, look at the volume. Right at the bottom, massive volume coming in. And that does indicate a possible bottom. I've used that before on trades. When you see a really good peak in volume, that can signify in the bottom, and then the volume decreases and keeps on decreasing as the share price rallies, and it just peters out. So no more interest in the buyers, and that's when we get the share price just going sideways like this. So if someone was looking at the share price or the chart, and you just see the volume really peaking up, and then the minute after the peak in volume, there was a nice little 1 minute candlestick, and that was a good indication that possibly the share price was at a bottom at that point in time. So I was a little bit confused. What caused the share price to do that? 11:09. They didn't release anything, so they released everything last night. And then before I started recording this video, I had no answers. I just had no idea. I was just going to say, this is interesting. And then I saw this particular tweet from Claude Walker. And this is a possible explanation. Maybe not possible, maybe this is the explanation. So the CEO, and the CEO has probably the most relevant name ever for a company. So the CEO is called Keys Will. Yeah, that's just, yeah. So if you don't know what this company does, they do cooling systems for like automobiles and other stuff. So they're highly into the F1. So again, Keys Will. Just, yeah, it's amazing. I think this is sort of proof that we are living in a simulation. Many other proofs, but this could be one. Anyway, so Keys Will drops a bombshell on the earnings conference call. There we go, earnings conference call. So that is one thing I never go to. So maybe that is a mistake. Maybe I should go to conference calls, but I have attention span of a gnat. And I have been at conference calls in the past, and I just tune out almost immediately. I need to be doing something. I can't just be listening. I need to be doing. So when I listen to podcasts, it's always when I'm outside doing stuff like going for walks or runs. I cannot sit down and listen to a podcast. I just can't do it. My mind just wanders. Anyway, so conference calls. If they were doing something in the conference call, maybe juggling, who knows? Anyway, so Keyswell said at the conference call, so we're going to assume this happened. We feel next year, by the way, this is not Claude Walker. This is A Rich Life, which is Claude Walker. He also has his own Twitter, but I'm assuming this is Claude Walker. Or maybe it's A Rich Life who owns PWR. Anyway, we feel next year is going to be fairly flat. NPAT. And I have a feeling that could be something to do with the expansion of the factory and some more capital expenditure. I don't know. Then he confirmed NPAT will be flat in financial year 25 compared to financial year 24, excluding those additional move costs. Okay, so that's the interesting part as well. So price was down 10%. Now it's down 20%. In fact, there's the chart, share price just dropped when that conference call was going on, and that news did, I wouldn't say leak, but did flow out into the investing community. So yeah, you can see share price was down as much as 20% at the low today. So then we saw the bounce. Anyway, so that's PWR Holdings. I'm still still owning shares in this company. I think maybe 1 weak year, this financial year 25 might be a weak year, but I still believe this company is investing for future growth, significant investing for future growth, and that future growth will mean 5 to 10 years, this company is going to be significantly bigger. Yes, significantly bigger. And the other thing I should just mention, so one of the things I'm doing is I'm looking for breakouts. And PWR Holdings had a perfect breakout 2 years ago. No, 3 years ago now. Oh, 3.5 years ago. I still remember this because at this point in time, I was not a shareholder and I was sort of studying on breakouts, that sort of thing. And then I saw this company. I did like this company back then. And then on the 22nd of February, when they released their half-year results, on that particular day, the share price rallied 7.9% on some good volume. This was a breakout. It wasn't. So if you just actually, I don't know why I put that line there. So if you just put it at, it's a beautiful. Share price was really struggling, getting above $5 and about 15 cents. And on that particular day, share price closed at $5.17. So right on at that resistance level. And the next few days, the share price did get above it beautifully. But look what the share price did not long after. In fact, I'm going to zoom in here because you can just see it perfectly. It's beautiful, beautiful. So share price sort of on that day closed right on that resistance level. And the next 2 days, the share price got above. We did see some good volume coming in. That's very important because there could have been some added supply of shares on the market because the share price had hit the resistance zone. So you might have some sellers coming in because it's at resistance. And what you do to fight those resistant sellers or those sellers is you need a bit of volume. You need fund managers who don't care about resistance levels. So they came in, a bit of volume coming in, share price broke out on the, we'll say either the next day or 2 days later. Share price went on a bit of a rally to 560, pulled back, tested the breakout on the 8th of March, very low volume on that day, and the breakout was confirmed. It tested again not that long after, on the 18th of March. And again, the breakout was confirmed. It wasn't, share price didn't fall below that breakout level. And then the share price just went on a nice, beautiful run. This is a beautiful, perfect breakout. Now, I've also mentioned breakouts like this on Positive Financial News. They tend to last 6 to 8 months. So how long did this one last? So started in February. And you could probably say, yeah, it started to look weak probably around about November, December. So we are talking about November, 9 to 10 months later. It started, share price and chart started to look weaker. Yeah, so again, it confirms my research I did a few years ago that breakouts like this tend to be they can last 6 to 9 months. Well, that's where the strength is, put it that way. That's where you're going to beat the market using this strategy for 6 to 9 months. After 6 to 9 months, there's less of a signal. That's probably the best way to put it. There's more of a signal between 6 and 9 months, less of a signal after 9 months. And this sort of confirms that. It's a sample size of 1, but it does confirm that. Okay. ASX. Okay, what I'm going to do with ASX is I'm going to have a look at the history for this company. First time I have ever looked at ASX. And I just want to say how this company has a moat. I assume this company has been growing pretty nicely. Nice revenue growth. The other thing I look for here is margins. So just gross margins. Gross margins, pretty nice, except 2023. Really high margins. What about net profit margins? Yeah, net profit margins. This is an indication of a moat. And then something happened last year. It would have been that thing they tried to do. What is it? The chess stuff. Anyway, so nice growth in this company. P ratio of ASX right now is about 26.15. I was surprised by that because I always assumed the P ratio of this company was quite high. So that was surprising. And I'm wondering if I am right. that historically the P ratio of this company has been quite high. So let's have a look at the historical PE ratio of ASX. I could be completely wrong. So here is the historical P ratio of ASX. Well, yeah. So 26 is, yeah, 5-year low. In fact, it went as low as about 23 not long ago, and that was like a 6-year low. So there was a bit of a profit expand, or not profit expansion, margin, not margin expansion, multiple expansion from 2014 all the way through to 2023. So back in 2014, the market was willing to pay P ratio of about 18 for this company, and then in 2023, that P ratio got to 40, which that's what I think of when it comes to ASX. I think of a high PE ratio company because they have a moat and they should be taking advantage of that moat, a pretty big advantage. Anyway, so let's have a look at the results for ASX. And I had a very quick look. Which one should I show you? Let's open up. I'm going to do this through Market Index. Let's have a look through Market Index, and we'll have a look. Why not the presentation slides? Why not? Actually, I didn't have to do that. What I should do is open up the PDF. I keep forgetting, but you do have that option. And it just opens up a new, yeah, it just opens up so quicker than ComSec. Don't care about that. Okay, so here it is, financial results. I know you probably shouldn't be looking at the presentation, but that's all I'm going to do. Okay, operating revenue up a little bit, there's a change on previous corresponding period, or two, and there's a change. Oh, there's a dollar change and percentage change. Okay, for some reason I thought they were both percentage changes. Okay, so I just care about percentage change. I don't care about dollar change. It's irrelevant. So percentage change. Operating revenue up 2.4%. Oh, eek. Not a good year. Total expenses up 14. They got negative, but it's actually increased 14.7%. So that's another negative. Revenue up not much. Expenses up a fair bit, which means EBIT and profit should be down, and they are down. So EBIT down 4.8%. Net interest income up. That's interesting. I didn't really think about that when it comes to ASX. They do benefit from interests or high interest rates. Underlying profit down 3.4%. Significant items. So last year there was a pretty big significant item, 173.8 million. Pretty sure that had something to do with that chest thingy. Statutory profit, that is up 49.4%. So that probably has something to do with the significant items last year, I'm assuming. Yes, it does. I'm not assuming anything. It does. Underlying earnings per share down 3.5%. Dividends down 8.9%. Underlying return on equity down 40 basis points to 13, which is a fairly low number. So if you historically, for this particular company, if we have a look at return on equity, no, it's not. So 5-year average is about 12.2% according to FinChat. So that's weird. I would have thought this company would have a higher return on equity than at 12.16. In fact, according to FinChat, return on invested capital is 3.7. That's quite low. Okay, so straight away I'm like, ew. But there is a potential that the market expected it. Now, 71 pages is a lot. I'm not going to go through this. I just wanted to see any sort of guidance. So what I'm going to do is I'm going to have a look at the market release. And if they do have guidance for the following year, it should be in this, you would think. By the way, we could also do, well, the P ratio probably hasn't changed all that much because the profit has dropped a little bit. But anyway, it's really interesting when a company's profit has increased a lot, and then you calculate the new P ratio and you go, whoa, it's not expensive anymore. Anyway, what was it? It was that chest something, I forget what. The chest replacement or something like that. Anyway. Here we go. Outlook and guidance. We are starting to see signs of return of IPO activity. Are we? ASX IPOs. I just look at small caps. Not many upcoming IPOs over the next 3 months. 4. And in 2024 so far, we've had not many at all. The last few have just been, Bargwan has actually IPO'd. I was waiting for that. Maybe a little bit of an increase than what we saw at the start of the year, maybe last year. Although last year there was not many. And I don't know, maybe they're starting to see a little bit of pickup in IPOs. And of course, that's fairly important to this company because over the past few years, we have seen the number of companies listed on the ASX actually decreased, and that's probably not a good sign or for ASX. And they've just name dropped Guzmini Gomez. But that's just one company. We continue to see increasing levels of interest from companies considering listing on ASX. I'm assuming they are accurate with that statement. The more stable macroeconomic conditions may be supportive of an increase in listings activity. So, of course, if we do go in recession, just an if, that would not be good for ASX. No numbers here, though. So July 2024, net new capital quoted on ASX was down following several large delistings due to conclusion of previously announced M&A activity, including the acquisitions of Boral and CSR. Notwithstanding these delistings, net new capital quoted on ASX increased by approximately $15 billion. The changing interest rate environment is driving higher trade volumes in interest rate futures, and we expect this trend to continue. Okay. And any number? Oh, here we go. Numbers. They're just talking about capital expenditure. Remains focused on underlying return on equity of between 13 and 14.5%, but really no numbers when it comes to the guidance. So how did the market respond? Share price down a little bit. So sort of a muted response from the ASX from the ASX on ASX. And let's have a look at the chart for ASX. And here we go. For some reason, chart's like, Now the share price was in a bit of a downtrend from late 2021 all the way through to the end of 2023. Share price fell to almost $54 or right on $54. So it looks like the downtrend has come to an end. But at this point in time, no interest in this company because of this chart. There's no breakout or anything at all. A few charts I wanted to have a look at. Appen, which has almost the same ticker code as ASX, just one letter different. Appen, this is looking really good. Look at the volume. Volume is important here. Really big volume, persistent, really good volume, high volume since the 30th of July. And this company has seen like 4 really good days in the past 30th of July. So in the past 2.5 weeks. This is really interesting. And not only that, the share price is getting to the highs the company saw back in March 2024. So not long ago. So very interesting where Appen is right now. And the other one was Adriatic Metals. And share price moving in a downtrend. Really nice update for the company. It could be a dead cat bounce because the volume is pretty weak. I'm going to show you one other chart. So I talked about this company not that long ago, and there was a nice little comment. So this company is called WT Financial, and they should have had the ticker code WTF. Oh, this is the company that could have had the ticker code WTF. I reckon that was on purpose. Anyway, I've always mentioned volume. Look at volume. So this company, and by the way, I have bought some shares in this company. Look at the volume. So we had a bit of volume when the share price reached its low or got near its low. And over the past week, we have seen an uptake or increase in volume. And the company has released, they didn't release their financial results, but they did release sort of like preliminary, not preliminary, what do they call it? WTL. So up again today, indicative results. And then they did a presentation deck. And I was thinking when they released that presentation deck 2 days later, why don't you just release this when you release the results? It just seems like the management was so excited about the results, they just had to get it out there. And the reason this could happen is because I don't think companies have control when they release their results. It's all up to the auditor because auditors maybe WT Financial Auditor have a lot of other ASX companies they have to go through, or maybe non-ASX companies they have to go through, and they leave WT Financial to the end. And so WT Financial Management just want to release the results because they're good. And a way around that is to release the indicator results and this presentation deck, even though they haven't released their results yet. So there's also a chance when they do release their results, the share price could rally on that as well. So again, a nice, potentially nice looking chart, a nice increase in share price on some good volume coming through. I was going to have a look at some of your comments, but again, video is almost at 1 hour long. So I'm going to end it here for this particular video, but I am doing answer and reply video tomorrow, which is the 17th of August. So have a good day. Have a good weekend. If you have any questions, any thoughts, leave those in the comment section of this video. Have a good day. Talk to you later. Bye. Don't forget, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.